It's Joel Frank here, market analyst for YouTrading, and today we're going to go through a bit of a trade idea that I'm thinking about. And as you can see from the chart here, it is relating to euro dollar. So let's talk about what's going on with euro dollar basically. These are 1 hour candlesticks, and you can see that for now, we can just draw a little line here. Around 102.60, 102.70, we're running into resistance, okay, with this 21-day moving average. Now, quite a lot's been going on this Thursday. We had the ECB raising interest rates by 50 basis points. And, you know, they had previously guided that they were going to go 25 basis points. But then earlier this week, there were sources that came out that basically said they were thinking about 50 basis points. Then markets weren't really sure what they were going to do. Now they've delivered on the 50 basis point rate hike. So let me just show you what's happened. These are 1 minute candlesticks now. There's the jump on the 50 basis point rate hike. Then we tested this area of resistance. Ignore these moving averages for now because they're just relating to 1 minute. And now we've reversed that move. ECB also unveiled a new tool to prevent another blowout in like Italian debt and Spanish debt and Portuguese debt yields versus like German and Dutch and other less indebted nation bond yields, which seems to have eased concerns about another Eurozone debt crisis for now. But here we are around 102. And I think there is a risk that we do push above this area of resistance that I've got marked up here, and that we challenge this area of resistance that's a little bit higher in the 103.50 area. Not just because of the hawkish ECB, where, by the way, they've also completely abandoned any forward guidance that they previously gave. And it seems as though, from just listening to President Lagarde just then, it seems as though 50 basis point rate hikes will be on the table at future meetings too. So there is the potential for markets to sort of up their ECB tightening bets for the September meeting and beyond, if inflation continues to surprise to the upside anyway. And that means I think we could push above here, and we could test this area of resistance here. And I was going to say that another thing that's also potentially going to work in the Eurozone's favour is the fact that the Russian gas flows did restart today, admittedly at lower levels, and admittedly the EU has been warning countries to reduce their gas usage by 15% between now and next March. So the energy crisis fears are still very much there, but they've eased a little bit, okay, because at least Russia hasn't just halted gas today. So anyway, I'm being a bit too long-winded here, but I do see the possibility that the euro dollar could push a little bit higher and test this area of resistance here. Now, you might have a lot of sellers waiting here, because if you look at euro dollar over the last like more than a year and a half, well, at least since last June, so the last year, selling rallies has been a consistently profitable strategy, particularly this year. And that is likely to remain the case because, yes, okay, the ECB is getting a bit more hawkish, but they're still not as hawkish as the Fed. The Fed just did a 75 basis point rate hike. They're going to do another one at the next meeting. And then they're potentially going to still be hammering 50 basis point rate hikes in like the meetings after that into the end of the year. So that works in the dollar's favour over the euro. Then there's also the concerns about the economy. Yes, we have data that's consistently coming out and showing that the US is slowing, like housing data this week at the US has been pretty ugly. But the US doesn't have an energy crisis. I mean, they've got expensive energy, but not a crisis that there might have to be rationing hanging over it like the Eurozone does. Okay, so Eurozone economy facing much greater risks, basically. So I do think that rallies in the euro dollar will be sold. And this area, I do like this area. And if we were to get above it, 103.50, and perhaps test 104, or maybe the 50-day moving average, which you can see hiding here next to that trend line at around 104.50, I think that could be potentially another area where you might want to sell if a bit of, profit taking on shorts or a stop run or whatever was to take you above 103.50. And this has been a trend line. I've been talking about this for a while now, this trend line that's been in place since February. I do expect that would probably hold. What would cause that trend line to break? What would cause us to rally back to, say, 108 and test this area of resistance here? I mean, you'd have to think it'd be things like a continued significant increase in risk appetite, which could, and stocks rallying, which would damage the safe haven dollar. That could be on things like really good earnings, and you could also get more evidence coming out that inflation in the US has peaked and is coming down, and then that could lead to lower US bond yields and a less aggressive, or markets expecting a less aggressive Fed. But the thing is, I think it's too soon to bet on this. I still think we're probably more likely than not we're going to head back to this parity level and move below it. And by the way, what is below parity? Let's have a look at some of the key. Well, in fact, you need to go on like a monthly chart to really get an idea, because you have to go back like a very, very long time. I'm very lost here now. Here we go. Yeah. If we go below parity, which is here, you're looking at probably testing this area here. Wow, all the way down to 0.96. That's the next sort of key area. But anyway, guys, hope you enjoyed the video. We have Eurozone PMIs coming out on Friday, and US PMIs, flash PMIs for July, which could shake things up a little bit. So do watch out for that tomorrow. And I will see you all in the next one.